What's up, guys? Welcome to the first episode of the Kevin Reardon podcast. And in this episode, we're talking about how to buy your first boutique hotel. I'm super excited. I'm super passionate about this topic because it's what took me from basically being broke after leaving my job as an attorney from Wall Street and totally recreating myself and building an entire hotel company, of which I've now sold one of my first hotels and made millions of dollars, both for myself and for people that have partnered with me. And so what I want to do here is actually walk you through step by step and how you too can get into the hotel real estate game. See, I see a lot of people that are wanting to invest into real estate right now, but they just don't know where to start and they don't know where they can find profitable investments in this economy. So for example, I have a lot of folks that come to me and say, Kevin, we're invested in short-term rentals, AKA Airbnbs or vacation rentals. And there's thousands and thousands of them all across the country. But what people are finding is that it's very difficult right now, whether it's because regulation is pushing them out of different markets or the margins are just getting increasingly smaller and smaller, and it just doesn't make that much financial sense to invest in a short-term rental as an investment strategy. And so we have a lot of people that are now transitioning and saying, okay, I have these skills as a hospitality owner, as an operator of these short-term rentals and Airbnbs, and we do really well. We have cleaners, we have management staff, we know how to communicate, we're pretty good with technology, but we need a better opportunity vehicle to create more wealth for ourselves, to create better margins, to be able to bring in investors. And that's exactly where hotels fits in. Then I also have other folks that are coming that are entrenched in commercial real estate already. They might already be in multifamily investing, commercial hospitality investing, or industrial investing, but they want to get into this independent boutique hotel space because that's where we're finding that there's a ton of margin. And that's for a number of reasons that we'll talk about throughout this podcast. But that margin is coming because we're creating unique experiences. We're transforming properties and reimagining them like they've never been imagined before. And we're taking advantage of the current digital media environment where we can get cheap attention onto our hotel and book our guests directly with us. This is just like the direct-to-consumer movement that took a wave through retail over the last 10, 20 years. Because in retail, you had consumers that used to have to go to big box stores. They would go right to your Best Buy, your Circuit City, old school, obviously to your Walmarts, your Costco's. And that really increasingly took up their margin and they became dependent on big box retailers. And then what we saw over the last decade is really innovative brands that could start up with not that much startup capital and get into selling directly into consumers, direct to consumer, using the internet, using social media, Facebook, Instagram, TikTok. And that's gotten a bigger and bigger industry over time. And now what we're seeing in the hotel space is that you can get great margins on investment into these independent boutique hotels. You just need to know how to get a deal done, how to set up your operations, how to market and brand your property and run that property. And so in this video, I want to talk about how to get your first boutique hotel. And I have a number of areas, 6 different areas that I'm going to go through to talk to you about how to just get from I'm interested and I want to invest and acquire a hotel and get my feet wet and get going. And then how do you get to setting up, starting your first property? So we're going to go through the acquisition of your first hotel. And I know at this point, what you might be saying is, oh, this isn't for me. I don't have experience in hospitality. I've never done commercial real estate before, et cetera, right? And what I'm here to tell you is that it really isn't that complicated. And if you have any experience at all, especially if you have experience with short-term rentals, Airbnb properties, the fact is that you can get started now. And there's a lot of people that had zero experience in the hotel industry that are doing hundreds of millions of dollars. And I'll speak for myself. When I got into this 8 years ago, when I left my job as an attorney in New York City, I had zero idea what I was doing. I had run short-term rentals for over a decade, but I never run a hotel, never acquired a hotel, had no mentors in the hotel space. I knew nothing, never worked at a hotel, knew no one that owned a hotel. And so if I'm able to do it, and if I was able to create $1 million net worth by investing into hotels, then I know that you can do it too. And think of this, when I started 8 years ago, this industry was really just getting going, and there was no coaching, no resources. I was completely on my own. And so I spent years and years and thousands, hundreds of thousands of dollars learning lessons on how to actually buy a hotel and do all the things that we're talking about in terms of setting up a hotel, marketing a hotel. There was no one to help me. And so I'm paying it forward here, and I'm going to try to simplify it and break it down and just show you that it's not that difficult. You just need to know the steps to execute along the way, and then you can go out and do it. You can do it a lot faster than you probably think you can. And so let's get into it. First, number one, let's talk about you yourself, the entrepreneur, the investor, the real estate developer. The first thing I want you to ask yourself is, what is your edge? In other words, what is the unique attribute that you have that's gonna give you a leg up over everyone else in the hotel and real estate space? So you gotta go inside, right? And you gotta take inventory of what you're actually good at and what your experiences are, what your skill set is, and be honest with yourself. Because we all have areas where we excel at, and then we have areas that we're really weak at. And so when you're first starting, I want you to take the areas that you're really good at, and I want you to really double down and use those to your advantage. You can learn and work on the other areas. You can hire people for those other areas, but let's be honest with ourselves of what we're good at. And so I'm going to tell you, be honest right up front. If you're really good at sales and marketing and branding, boutique hotels are an excellent place to be, because at the end of the day, creating a super strong brand and having a great go-to-market strategy for your brand in this independent hotel space is going to pay dividends, because that is that white space, that big, wide open ocean of opportunity right now, is to create completely unique experiences and brands around hotels and be able to market people to people very cheaply using social media, using different digital media strategies that we teach at Hotel Accelerator. And so marketing is a great place to be, but it could be other areas. Maybe you're really, really good with numbers. You're really good at underwriting and finding deals, right? And so maybe your strength is going to be you know how to find really unique, profitable investments, how to put together really good performers, reimagine properties, and make them cash flow better than anybody else. And then you can bring in operators, branding experts, et cetera, to help execute the rest. But you're really good at finding these deals, putting the investors together, managing the investment, the money, the numbers. Great, right? So there's just a couple examples. Like, what are you good at? Number two, your identity needs to shift as you start going forward. So what I want you to do is imagine a successful hotel investor, someone who is invested in commercial real estate, someone who's invested in independent hotels. Go research those people. See what those people, what their lives are like, what they look like, what they're doing, where they're working, what their hotels look like. And then you start to draw a picture in your mind of how you can become a successful hotel owner and operator. You just need to create a vision. And once you have that vision, you can take action towards that vision. You can start acting like someone who owns hotels. You can start acting like someone who operates successful hotels. And that is a secret key for your mindset to get you where you want to go. So let's go to the second area now, which is to set the criteria for your hotel acquisition. And there's three key things that I want to talk about here. So the first is, where's your hotel located? Now, I talked to some investors that are just looking all over the country. If they're in the United States, they're looking all over the United States because they think they're looking for the markets that are doing the best. And if there's the top 5 markets that some listicle says are the biggest growing hospitality markets, then they're like, okay, I'm going to invest in there. I would say, hold on and pull back a little bit and recognize that as a new hotelier, a new real estate investor into the hospitality space, one of your core key strengths is the areas that you already know super well. And you want to use that to your advantage. So for example, I would think about the few different cities or areas that you know intimately, like you know the different blocks. What block is a good block? What block is a bad block? Is it a growing city? Is it a city in decline? I would use that inside information that most other people outside of that area would not have. And that becomes some of your proprietary information because you've lived that experience in those places and you know what are the best assets, what are the best areas, how does this area function and operate? And you have a leg up over investors that are coming from out of town. And so I would use that to your advantage. And so I would say, generally, if you could stay within 90 minutes of where your home base is, I would suggest starting there. Again, it's not a hard and fast rule, but it's going to make your life a lot easier, at least for your first deal, instead of trying to find something across the country in a market you have no idea about. Number two, how big is the market that you're looking at? So how big is it a giant city? Is it a little city, right? And if it's a smaller city, then you might be able to have a larger footprint and impact. And if it's a larger city, there's might be more red tape, more bureaucracy that you have to work through, right? So think about if you're doing development, if you're redeveloping a building, you might have to go get approvals, go through a zoning board, et cetera, go through and work with politicians. So I want you to think of like, what's the makeup of the city and what is the appetite of the city for the development that you want to do? Because it's easier if you could fight less resistance rather than more resistance. Okay. And then also think in terms of the asset itself. How big of an asset do you want? So you could do a 5-room, you could do a 15-room, you could do a 500-room. I would say 500 might be a little big for a first time, but I would also caution you about a hotel that might be somewhere between, say, 10 rooms and 30 rooms in kind of that middle gray area of 10 to 30 rooms, because what you're going to find is it requires more labor to run an asset of that size. You can't just run it with 1 or 2 people, but at the same time, it's hard to extract enough margin out of those rooms in order to be profitable on that investment. And so what I usually tell people is, as a general sense, either go smaller, like under 10 rooms, and make it a super intimate, luxe, but low staff operation. Or I would rather you go for a larger asset and think bigger. So think 50, 100 rooms. And even though it's scary and it's a bigger number, you have more margin for things to go wrong. You have more margin when things go right for profitability. And you have a larger buyer pool when you want to go and exit that hotel. So there's a number of reasons to go larger if you can, even though our intuition and our gut says it's scary. So I want to push you to think big. And third is the amenities, right? How will your building operate? Will you have a pool? Will you have a spa, a sauna? Do you have tennis courts, basketball court? Do you have rentals on site? Do you have food and beverage, right? Think about the amenities and what you realistically want to operate. Because once you start adding amenities that require more people, you get to a larger operation. It's going to require a lot more hands-on. It's going to require more capital, and it's a little more sophisticated. So think about if you want to have like a full service property, or if you want to have a much more self-service property with less staffed amenities. I would, again, in the beginning on your first deal, suggest that you might want to think a little bit more towards the self-service aspect and really let guests have an incredible room, incredible experience just on a property that doesn't require a lot of staffing and a lot of labor and overhead. Okay, so those are the first 2 of 6. Now we're on to the third, which is now you've kind of set the criteria for what you're looking for. You know yourself, you're honest with yourself and what your strengths are going to be and what you're going to contribute. And now number 3 is to find the deal itself. So 2 things I want you to think about in finding the deal. Number 1 is it a listed deal? And number 2, is it an off-market deal? All right, so when you're going to look for these deals, the listed deal is going to be somewhere that you can find online. It's usually going to be listed through some sort of broker, right? And so it might be on like a Crexi or a LoopNet, or it could be off market. Off market deals are going to be you're going directly to the owner, or you have a broker that has not listed it yet, but knows of an opportunity with an owner. Now, in this space, I would suggest to you that the best way to go and the best deals that we find are almost always off market. And I know it's more difficult, but you just have to think, all right, the on-market deals are picked over by a lot of people. A lot of people have seen these deals. Investors like myself, when things come on, I look at them and I can, within a couple of minutes, do back of napkin math and know if it's generally a good deal or if it's way overpriced, whatever it is, it's a bad area, right? I kind of know. And so when you see something online, it doesn't mean that there aren't deals online or you can't go and try to negotiate something. But generally, the home run deals, right? The triples, the home runs, the really, really good investments, those are going to come from an off-market space, an off-market lead. And so you want to go and know brokers. You want to go start talking to owners, even if that means cold calling or knocking on doors. That's how you're going to find really good leads for a hotel. All right, number 4, underwriting and analyzing the deal. Okay, so now you've found deals, whether they be from online or from an off-market referral, and now you need to underwrite and analyze the deal. So there's 4 key steps that you need to think about here. The first one is getting the property level data, right? So you'll go to the broker, the owner, and you want to get like their last few years of performance data. You want to know what is their net operating income, what are their expenses, are the numbers being fudged, right? What's their ADR, what's their occupancy? You need to gather all of that information. Then number 2 is you get the market data. This is where you need to go and one, you're going to just do your own kind of visual inspection of the market, right? So you're going to pop around to competitors, to the building itself, around the market generally, like physically look at it. And then you're also going to get a report, what's called an STR market report, and it's going to give you the benchmarks and the performance of that market. So the STR company, Smith Travel Research, they sold to CoStar. And so now you'll get this product through a company called CoStar, and they have the information that you need in terms of aggregating all of that market's average daily rates, occupancy trends. Are we going up, down? Is there new construction? There's a whole bunch of areas in that report. And so you're going to use that report and analyze that report. Number 3, you're going to build your pro forma. And this is going to be like one of the most key essential aspects of your underwriting. This pro forma is going to show the operations of the hotel and what the revenues are, what the expenses are, and where you're going to net out on an annual basis. This is where experience helps. This is where having benchmark numbers for the market helps, because you're going to take these numbers and you're going to put them into a pro forma template that you have, and it's going to spit out to you a net operating income number. And then you're going to use that to do the rest of your analysis and seeing if it's a good investment. And so you got to have good data in to get a good read on if it's a good investment. If you put bad data in or make bad assumptions or unreasonable assumptions, then it's just going to give you a bad output and it can't be relied upon. So this is where it's a bit of an art, a bit of a science in order to put together a really good pro forma. So you'll put together that pro forma and you'll get to the 4th aspect, which is underwriting the actual investment level itself, as well as the investor level returns, right? So the investment level returns, property level returns are, all right, I've taken my assumptions for operations, right? The pro forma that we've now constructed. And now I need to input that into another template spreadsheet that you would have to look at property level returns. And no, this will tell you, okay, with this cash flow, let me enter that in, and then let me consider now the purchase price of the property, how we're financing, and you'll put it into a spreadsheet, it'll show you then, okay, now if I know the purchase price of the property, how much capital improvement or CapEx I need to put into the property, what are your holding costs on the property, your closing costs on the property, what's your financing costs, right? Upfront, your one-time costs at the beginning of the acquisition, and then your annual cost of financing. What's the cost of the equity? What's the cost of the debt or any other vehicles like a mezz debt, right? What is all of that cost? And then how does that output then with the cash flow to see what your actual net cash flow to you as the investor is, right? And that's where you're going to make the determine good or bad. You're going to look at a couple different metrics here. You're going to look at IRR, your internal rate of return. You might also look at your equity multiple or the multiple on cash, right? So how much money you put in and how much is returned at the end of the project. There's different areas where this can manipulate. I mean, one of the biggest areas that can manipulate the end number would be your exit assumptions. Are you selling the property, refinancing the property? And what's the assumption on what that number is? How many years out is that assumption? Is that 3 years out, 10 years out, right? And so this is where I'm saying the different assumptions are going to impact whether it's a good investment or not. And this is where you need to kind of check your gut, but also check with mentors and coaches and see if your assumptions are realistic. And that's where it's going to be super critical and helpful. Also, when you start working with brokers and banks and other investors, they'll give you input as well. But at the end of the day, it's going to be your decision to know if this is a good investment or not. And then the one other piece of the return analysis would be for investors, if you're bringing in other investors other than yourself. And so you'll need to look at, okay, well, if I'm offering them a certain type of equity return, and maybe you're doing what we call a waterfall, right? A waterfall where you're specifying, okay, when X amount of cash comes through, here's how it's going to be distributed and what your returns are going to be. And so if you're raising private capital and creating a special class of equity for those partners, then you'll want to do a return profile for what are they getting out of the deal based on all the assumptions that you've now made. Okay, so that is the fourth area, which is underwriting, analyzing the hotel deal. Number 5 is funding the deal. Okay, and this is where we get into the complexities of determining the equity structure, determining the debt structure. I'm going to keep it simple. We can get, super into the weeds of commercial finance, hospitality financing, but let's keep it very simple here. So, number 1, you have a capital stack to fund your hotel deal. That capital stack is going to be comprised generally of some portion of equity, some portion of debt. The debt generally is going to be less expensive than the equity. And this is kind of finance 101. Why is that? Well, the debt is foreseeably less risky than the equity because it comes ahead of the equity in priority in the case of insolvency or bankruptcy. And so if the lender that you're working with, if you, the bank, right, lend somebody 80% of the value of the hotel they're acquiring, and then that investor has to come up with the other 20%, and you are ahead of the investor in priority, then if something were to go bad on the deal, the bank only have 80% of the investment of the capital put up. And so you have 20% of margin where you can take a haircut on the investment if it's going bad, right? And that's just an example. And so typically on a hotel deal, you'll maybe structure debt that's going to be 60 to as high, possibly as maybe 80% of the acquisition or the post-renovated value of the acquisition if you're doing renovations. And that is going to be your first lien debt. Now, we also talk a lot about second lien debt or owner financing and how that can play a crucial role in buying your first hotel. That could potentially bridge the gap from 70% to 100% to allow you to acquire a hotel with no additional investors. I was lucky enough in my very first hotel deal to get 100% owner financing. It's not common, but it's possible, right? So debt is great because it is typically the lowest priced, right? But then we have the equity. Now, the equity could be just you funding the deal yourself, right? Putting in the required down payment and covering the spread between how much debt you can have and what the acquisition and renovation is. It could just be you, or you can raise capital from private investors. It could be 1, 2, 10, 20 people. It really just depends. And this is a very complex area that you can get into. Okay, what are the various return profiles that I can provide? You could get preferred equity. You could have the same class of equity, but you could offer maybe a preferred return. There's many different ways that this can shake out. We're not going to go into complexities here, but you just need to know that you need to put a debt structure together, equity structure together, make them work depending on the deal. And then you'll know your cost of capital for the deal and how you're funding the deal. Finally, number 6, closing the deal. So you've done all of this work, and you've probably now at this point gone through a couple months process of finding the deal, negotiating the deal, finding the funding for the deal, and now you need to actually close. And this is where you just have to get super committed, super certain, and just push, because you are going to want this more than anybody else, and you don't want it to fall apart. Now, the broker's incentivized to get this done because they want to get paid out when deal closes, right? The seller wants to get it done, most likely because they've decided they want to get out of the investment. But at the end of the day, if you can be super organized and super motivated and push this forward as the buyer, then you are going to be in control of this entire process, and you're going to make it go fast. If you're just passive and you sit back and just kind of let it happen, then chances are it might just the whole deal might fall apart, or it's going to take forever and be a total pain, right? And so closing the deal, I can't recommend enough to make sure you're working with really good professionals. One of the issues I see a lot of rookies and novice investors, especially in this hospitality space, because it's so different than other investments, is they bring in people that aren't experienced in this stuff, or they haven't done it before. So like you're working with like a residential broker, right? Or you're working with a bank that doesn't do hotels, whatever it may be. You want to work with professionals that have done this stuff before and have a good track record. Even if it costs you more, it's well worth it in the end to get advice from really solid people. And so, example, there's a million professionals that you'll need to engage to do a commercial hotel deal. And this is where you need to have some capital ready before the deal even closes so that you can hire professionals, right? So you're going to have brokers, you're going to have a title agency, you might have a loan broker, insurance broker, lawyers, possibly multiple lawyers if you're going to have one for fundraising and one for the acquisition. An accountant. You might hire a cost segregation company for tax purposes for after closing. You might need to hire an environmental engineering company to do what's called like a phase 1 study. You might hire a building inspector to come in and actually take a pretty deep look at the building and deliver to you a report on what the issues are, if there's any major issues that you haven't found visually. You might hire an architect, particularly if you're going to undertake a renovation of an existing hotel, motel, B&B inn. And you might start engaging professionals that do design and branding before you close so that you can start putting into the package together of what your vision is for the hotel and how you can pull it together. All right, so you're gonna get all those professionals, and then you are going to drive all those professionals. You're gonna pull everybody together, drive the deal forward, and get to closing. And sometimes that's the toughest task, and you're gonna feel like you're almost there, but there's just one little thing that has to be now resolved. And then another little thing comes up and that has to be resolved. And the key is just not get frustrated, but just keep pushing through. And eventually everyone will just say, okay, we're ready to close, and you'll get it done. It's very anticlimactic. You get to the closing table, everyone's exhausted, you close it, and then you're off to the races with setting up operations and getting the hotel cash flowing. We'll talk about that in another discussion, but hopefully these 6 major steps that I wanted to talk about with you about buying your first boutique hotel are super helpful to you and just give you a general landscape of what acquiring a hotel looks like. Again, as a new investor, I would look towards acquiring something that's already existing, a hotel, motel, a bed and breakfast, inn. I would look at either doing something that's smaller and easy to run and you can charge a lot of money for, but low labor requirements, or I would go for something larger, maybe look at something that's 40, 50 to 100 units, maybe not get too far into things like food and beverage and spas, try to keep it simple in the beginning, get really good at your hotel operation, and then you'll scale from there. Yeah, my name is Kevin Reardon. I am so excited to be on this journey with you in helping you get into your first hotel investment or getting your next hotel deal if you've already done some. This industry has changed my life, and it's my duty and honor to pay forward and help other people do the same. And we'll see you in the next episode. Peace.